Thursday, Russia claimed its troops had taken the southern city of Kherson, despite the head of the local administration saying he was working to keep the Ukrainian flag flying over the city. Footage posted on social media the previous day on Wednesday showed armored vehicles on the streets of the city, as seen from an apartment window. Britain's Ministry of Defense said on Thursday that despite heavy Russian shelling, the cities of Kharkiv, Chernihiv and Mariupol remain in the control of the Ukrainian forces. It said that some Russian forces have entered the city of Kherson, but the military situation remains unclear. And just to remind you, oil prices are indeed surging further since Russia's invasion of Ukraine. During early Asian trade on Friday, Brent crude oil futures were soaring above the $110 mark, rising to $111.76, while U.S. oil rose to $109.32. Now, previously on Thursday, the 3rd of March, Brent crude settled at $110.46 per barrel. And not just the price of oil, but the price of food commodities have also been surging. On Thursday, U.S. wheat futures index soared by 7.1%, settling at $11.34 per bushel, the highest in 14 years. U.S. corn futures index was also up by over 1.9% to reach $7.62 per bushel. Previously, it hit its highest level since 2013 during intraday trading hours. So Russia's invasion of Ukraine intensifies. Its global economic impact is also being felt. We are going to discuss this further with economist and rector of the University of Indonesia, Professor Ari Kuncoro. Hi, Prof. Ari. Thank you so much for joining us again on Movers and Shakers.
Good evening.
All right. So first of all, Prof, I want to ask you about the Indonesian stock market first, because as we know, the Indonesian Composite Index today recorded a new all-time high. This is amid the Russian invasion of Ukraine. So are we seeing larger capital inflow incoming into Indonesia? Because there was a lot of foreign net buy today in the Indonesian stock market.
It is very interesting development, right? I think it is the first time that we have the world crisis, but Indonesia is enjoying the windfall. Yeah? And from your data, I think there is a heavy capital flow to Indonesia. I think people around the world are dropping the Russia asset, but they don't move to US because there is still the risk of the tapering and because the US and NATO involved directly with the conflict. So they are looking for the safe haven. So Indonesia becoming the safe haven. If you look at the movement of stock and as well as the movement of rupiah, I think that tells us that the war so far is not giving the bad time for Indonesia, at least for now. And I think it is for the near future. I think this will be the type of the crisis, the world crisis, that actually for Indonesia probably is not crisis if we just look at the financial data. But I don't know, maybe in the March or April and May, because the crisis will also affect the food price. You just show that the wheat price, the corn, or also soar. I think we have to be careful about that. We have to monitor that.
Okay, so before we go to the commodity prices, I still want to stick on the topic of capital inflow coming into Indonesia. Now, could you just maybe explain to our viewers why are investors choosing, to put their cash in Indonesia? Is it because Indonesia's economic growth is on a good trend, or what is the reason, Prof?
Yes, first is the growth, right? I think the fourth quarter of 2021, Indonesia posted 0.02% year on year. And rupiah versus US dollar is relatively stable. And inflation so far is going to 2% something. And all are the necessary conditions for the capital market. That's why the international money now are flocking to Indonesia. But we have to be also very careful. This is hot money, right? It can be going anywhere else. But so far, as we maintain the macroeconomic framework, then we will be okay. I think the next homework for us is how we manage inflation. That is our homework in next 3 or 4 or 6 months in the future.
All right, Prof. Now, talking about inflation, as we know, Indonesia buys a lot of wheat from Ukraine. Is this going to be a problem for Indonesia? Because as we've seen, wheat prices are going up, and the supplies are also going to go down because Ukraine is one of the biggest exporters of wheat. So in your opinion, will Indonesia be impacted by this in the short term, at least?
Yes, it will affect the world price of wheat because Ukraine is 25% of the world supplier. So Russia and Ukraine combined together account for 30% of the world supply. But in 2021, Indonesia has shifted its main supplier to Australia. So Ukraine no longer the main import. We do not import from Ukraine as much as before because right now Ukraine is in the second place after Australia, and also wheat is not the main staple for Indonesia. So if we have let's say increase in the noodle, in cookies and bread, yeah, people can make substitution easily by eating more rice or using rice flour, okay? And it's not a problem at all. So the price can increase, but as long as you do not spend on that product, the inflation number will be low, right? Will be low. This is the important in the economic, what we call the principle of substitution. And that is also relevant of what the president said about transformation. Transformation is actually substitution from the fossil energy to renewable energy, right? From dependency on, for example, oil, palm oil, to diversify to other. Yeah? That is the principle of transformation.
Okay, Prof. So what you're saying so far, the Indonesian financial market seems to be safe from the impact of the Russia-Ukraine war, and also our food commodity prices, especially wheat, the supply will be safe from the impact of the Russia-Ukraine war. I want to ask you also about the exchange rates, because as we know, the Russian ruble, has plunged to historic lows. I think it fell by 30% earlier this week on Monday. I'm just curious to know, what kind of impact will this have on the rupiah, or the impact on the US dollar, which will then impact rupiah as well?
I think the Indonesian export to Russia is 0.34%, so it's very, very small. And also, we have strong capital inflow, like I mentioned before. So the impact of the ruble or the ruble on Indonesia will be very low. But we have to be aware too, because the US dollar index has increased from 97 to 98 within 1 week. So after the after the invasion, just in the span of 7 days, the dollar strengthened to 98. Yeah? But fortunately, we have our trade account still in surplus. Our capital account also enjoy the capital inflow. So the rupiah is stable around 14,300 something. So the impact is very, very minimal, right? But we have, again, we have to be careful here. What we really want to know is actually the impact of US tapering and inflation of the coming from the oil price. That is very, we have to carefully monitor that in the next month or 2 or 3.
Okay, Prof. Before I ask you about tapering, I want to ask you about the US dollar. You mentioned just now it has been strengthening, this week since the start of the invasion. Do you project the US dollar to strengthen even further as a conflict seems like it's further escalating?
Yes, it is possibility because many countries actually dropping their financial assets first in Russia, as well as they actually stop the collaboration. I think from your session, we are watching the IKEA has stopped operation in Russia. That definitely will have impact because they have to go first, the US dollar will strengthen the US dollar, and then they will make investment in other country, possibly in US dollar or in the domestic currency. So definitely the US dollar will strengthening in the next month or so.
Okay, Prof. So basically the US dollar is going to strengthen, but Indonesia still has the right capacity to withstand the strengthening of the US dollar. Rupiah will still be stable. That's your opinion. And we're going to be talking more on this Russia-Ukraine war impact on economy after the break. Stay tuned with us on Jakarta Movers and Shakers. All right, welcome back. We are continuing our dialogue with Professor Ari Kuncoro about the economic impact of Russia's invasion of Ukraine. So, Prof, I want to ask you, of course, Russia has been hit with some very heavy sanctions. Countries have been careful about their sanctions because Russia exports a lot of oil and gas, and they have many exports. Their economy relies on export. So, in your opinion, do you think the sanctions that are being put on Russia, are they having a negative impact on the global economy?
Yes.
Okay.
The food price, the energy price, absolutely, there has been an impact. So if we look at the West Texas Intermediate right now is hovering around 110 rupiah per barrel, right? Also the wheat price, that is the impact. But if you're talking about what is the impact on Russia, because the purpose of the sanction is actually to stop the invasion. I think that has some impact. If you look at the value of the ruble, actually has depreciated by around 40% within 1 week after the invasion. And the good sign is Ukraine and Russia actually they are talking right now. I think the second meeting, although I think the result did not produce the ceasefire, but at least they both agree to establish the safe corridor for the evacuation of the civilians. That's the good thing. Yeah. Also, no less than Secretary of the State, of the U.S. Secretary of State, said that it's still possible to have talk with Russia. That explains why the price of oil is holding up around 110 US dollar per barrel after WTI going up to 112. Yeah. So there is a hope. So any kind of this escalation actually very much welcome by the trader because they also anxious that they don't want this to go out of control. Yes, they want the higher price, but not out of control price. So definitely there is an impact. Hopefully there will be some solution of this conflict. But on the other side, what has been frightening is actually what happens if the war actually turns into the protected war, like 1 month, 2 months, 3 months, because the strategy of the war is actually they want to strangle their opponent, right? Not by attacking, just by encircle them, the siege of Kiev, right? They are not attacking, Russia not attacking, but just waiting. That is, I think, the worst scenario for the world economy, because we have to prepare for how long, right?
Okay.
I think in the first week of the war, I think many people they hope that there will be quick solution, right? But right now, I think we have to wait for a while. That is the most frightening aspect of this conflict.
Right, but that is a possibility if the conflict extends and it's a bit of a long-term conflict, 1 month or 2 months. But there are projections right now that Russia's economy is projected to contract by 35% in the second quarter. Now, how will this impact global economic recovery, and will it impact Indonesia's economy as well, Prof?
I think if the Russian GDP actually contract by 35%, almost no impact on the world. But the problem is not the Russian GDP, but the world GDP. Because the US, I think they have to be careful. For example, the tapering, I think there is dilemma, because if they impose tapering, the danger is there will be a recession or stagflation. Also included in this list is actually the European country. So the global contraction is what happened, not because the Russia GDP, but because the world GDP. That is the race. That's why I said before that the risk of the conflict going into long war is actually, we don't want that to happen. We pray that there will be short conflict.
All right, short conflict.
And there is some solution will be reached within 1 or 2 weeks.
Okay, Prof, just very quickly, we have maybe about 20 seconds. I want to ask you about the Fed's tapering you were mentioning before. Do you think because of this Russia-Ukraine war, the Fed will be pushed to increase rate hikes even higher because, you know, it's causing inflation to go up? Just very quickly, Prof.
Yes, I think so, because the Fed is actually, usually they move beyond the curve, but right now they are behind, way behind the curve. Okay. I think they have to do something just to impose credibility. I think that the intention actually they are going to rein on inflation, not on all type of consumer goods, but they want to at least restrain the consumption in durable, probably housing, but not on food. So they will accept inflation around 3 or 4%, but 7.5% is not acceptable. So that's why the Fed will, the Fed tapering will be on track.
Okay, Prof. Thank you so much for your insights today on Jakarta Movers and Shakers on the economic impact of Russia-Ukraine war. Thank you so much, Prof. And we'll be back